After two of the worst weeks in the market in years, we can thankfully end the week on a somewhat optimistic note. Here's why. After a dismal jobs report yesterday that reported layoffs rivaling the Great Recession, there was a lot riding on today's unemployment rate update for February. Well, it wasn't great, but it wasn't as bad as it could have been. The rate of 4.1% did come in over January's 4.0%, with a forecast of no change in February. However, 4.1% is still considered within the natural rate and well below what we'd expect to see in a recessionary economy. Due to bearish sentiment driving the market, investors initially continued their sell-off, dropping the S&P 500 to a one-week loss of over 7%. But there was some light at the end of the tunnel for us. Federal Reserve Chairman Jerome Powell provided a speech covering his economic outlook. Thankfully, his speech eased the fear of investors. While Powell stated the Fed is holding off on interest rate changes, the U.S. economy is in a good place despite elevated levels of uncertainty. In the minutes following Powell's speech, the market quickly rallied around his cautious optimism, driving the S&P 500 to its first positive day of the week. With some wind back in its sails, we look forward to a number of crucial economic reports in the coming week, including job openings and the biggest economic update of the month, CPI inflation for February. Follow for more market insights and economic news.